After today's brutal Brexit-inspired beating, what kind of stock should you be on the lookout for as the market continues to get hammered next? And I think it will be next week. Make no mistake about it. We're likely in for a multi-day sell-off here. How about a cheap tech stock with a big dividend like Cisco, the networking giant? Ever since CEO Chuck Robbins took the helm a little less than a year ago, he's been transforming Cisco by moving aggressively into key growth areas like the Internet of Things, cybersecurity, the data center. And these efforts are now bearing fruit. That's why we own it from my charitable trust. You can follow along actionalertsplus.com. It's given us a nice game. Just witness the company's latest quarter, the terrific beat and raise that Cisco reported a month ago. Or look at how they've been using their monster $63.5 billion cash hoard, make a series of cloud and Internet of Things related acquisitions. Plus, a couple weeks ago, Cisco announced a powerful new data center and analytics platform. And at the beginning of the month, we learned that they're partnering with IBM to provide enterprise customers with an Internet of Things analytics solution. Oh, let's not forget, Cisco just won a gigantic patent infringement lawsuit against competitor Arista Networks yesterday. Could help ease some of the competitive pressures in their networking business. With its 3.7% yield here, I think Cisco's the kind of stock that only gets more attractive as it goes lower, which is good because I think this market will head lower next week. So let's take a closer look with Chuck Robbins, the CEO of Cisco, find out more about how his company's doing, where it's headed. Mr. Robbins, welcome back to Mad Money.
Hey, Jim, it's great to be here. Your energy level's pretty high given the week you've had.
I know. Chuck's referring to the fact that I sat next to his fantastic CFO, Kelly Cramer, earlier this week in a very nice gathering in San Francisco. Chuck, your stock down 5% today. Maybe people are saying that you do have a lot of Europe exposure. And some people would say maybe as much as 25%, maybe a little less. Is that an overreaction?
Well, Jim, you know, the UK itself represents mid-single digits for us from a business perspective, and we obviously are committed to the UK and the other countries in Europe from a digitization perspective, regardless of what transpires here. You know, our focus is on the things that we can control, and we deal with lots of macroeconomic issues, geopolitical dynamics, and these are just the things that we all have to deal with. Some are bigger than others, obviously, and our focus is on what we can control and driving innovation, much like the tetration launch that you talked about just a few minutes ago.
Well, I want to talk about that because to me, the old Cisco, I'm always concerned, and we'll get to that, about switchers and routing. This is a kind of a soup to nuts plan to monitor data centers that I would think a lot of your customers would just want to have because they don't have it right now.
Well, Jim, our innovation strategy has evolved, and we have created these small internal startups, and this team was the first of some announcement that you'll see over the coming months. And leveraging the network, which has the ability to see everything, and providing insights to our customers inside their data centers is something that they haven't had before. And then leveraging that to deliver cloud-based policy and management and security is something that our customers are all pretty excited about, and it's a great example of what we can drive from an innovation perspective internal to Cisco.
Well, this is the new Cisco that I like very much, but let me ask you about something that Meg Whitman said to me when I talked to her. This was not that long ago on Squawk on the Street. She goes, if you look at our networking business grew 18%. Cisco's shrunk 3%. I mean, she's basically saying that she's taking a great deal of share from you and that this is very important business. What do you think about her analysis?
Well, I think, Jim, that it's easy to get excited about any given quarter. We're focused on the long term. We're focused on how our customers today are looking at technology as a fundamental change agent for their business strategy, and how, in order to take advantage of that, they are going to need an end-to-end network architecture that exposes these analytics that we've talked about, that actually provides security on an end-to-end basis. So I believe for the long term, our customers are looking to Cisco as we have a history of helping them build out full end-to-end solutions. We understand what's happening with the Internet of Things and digitization. We can deploy security like nobody else, which is indicative of the results we've seen in that portfolio. So I'm very confident about where we are, Jim.
Okay, now, yesterday I was reading a note put out by your general counsel on this very important lawsuit that we've been following, the Arista Networks. And that company lost about lost a huge amount of market cap. And I think in part that's because it did make it sound like, your general counsel made it sound like that Arista better be very careful selling certain kinds of products that were found to infringe. Anything material could that be for Cisco in terms of going forward, your salespeople being able to make different kinds of sales calls?
Well, Jim, our objective with this was simply to protect our intellectual property, which fundamentally is an enabler of our ability to innovate and having the financial wherewithal to continue to spend the $5.5 billion that we spend annually on innovation. And so we're pleased with the outcome. And I think that our customers recognize that they want to work with companies that are truly driving and investing for innovation that they can use going forward. And so I think customers will see that innovation is coming from us and that they appreciate what we do for them. And they also acknowledge that we have an incredibly strategic role to play, not only in the data center, but again, across the entire infrastructure and how that is manifested through cloud and analytics and security in the future.
You have been very good. You talked about your internal group that's developed things, but you've also been very good at picking off companies that have had a hard time trying to come public. We had a pretty interesting company, Twilio, come public yesterday. Geez, it seems like years ago. But are there still opportunities? Because that seems like a very small window. And once again, just because of today's action, it might have closed again.
Well, Jim, the beauty of our model is that we have different levers for dealing with market transitions, entering new markets, and driving innovation. So we have our own internal R&D capability that I've talked about here. We have the ability to partner. We have this strategic partnership with Apple and some of the announcements that came out at the Worldwide Developer Conference with Ericsson and Inspur. And then the third is our ability to do M&A, and we've acquired 14 companies since I was named as CEO, and we'll continue to use a combination of all of those. And as you know, as valuations become more attractive, then there's probably going to be more and more activity in that space.
All right, well, last question, Chuck. Can you just give us, because you're a pretty open guy and you run a hands-on outfit, will you do a conference call, which I know you guys are better at than everybody else, but will you do a conference call worldwide or with Europe over the weekend? Will you have some game plan that you'll say, listen, here's what we're going to do. We're going to buy back this. We're going to do that and be ready. Some sort of explainer to your employees beginning, say, Sunday night or Monday.
Well, Jim, that's already occurred actually inside. We do a really good job of building contingency plans for different scenarios, inclusive of the Brexit vote this week, as well as the ruling that we were expecting from the ITC. And so we have already communicated with our teams. We were on the phones early this morning, ensuring that our teams knew they had our full support. And obviously, again, our commitment to the UK and our commitment to other countries where we have digitization efforts underway, like India, France, Germany, that's where we're going to continue to focus, and we're excited about the opportunity.
Well, look, thank you so much on a very busy day, Chuck, for coming on. I really always appreciate it. Good to see you, sir.
Hey, thanks, Jim.
Absolutely. It's Chuck Robbins, CEO of Cisco, down 5%. I don't know. It didn't sound like a stock that I think should be down 5%. Stay with Mad Money. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.